Welcome back. As promised, let's now go across to Ramdev Agarwal, Chairman of Motilal Oswal Financial Services, who's joining us. Ramdevji, great to have you with us in the program. Can I see a lion behind you, or is that a cheetah? Because you are coming to us live from Kenya, I believe.
Yeah, it's a beautiful weather here, and a lot of animals all around, and I think there is a lot of action in Mumbai.
Yeah, but it's.
I think it's the
action
first time they would want the animal to be a bull and not a lion or a cheetah or anything else.
Just need more bulls in Mumbai.
More bulls behind Ramdev than just
I think
lions.
The biggest bull is in Kenya.
He's in Kenya right now, one of the biggest Indian bulls. So yeah, we had to get a bit of Ramdev ji back on the screen because the market needed to hear the bullish voice.
But there is Ramdev ji, thanks for joining us. I know you're on a break.
Yeah.
But how do you assess this entire situation? The tariffs have taken effect, 50%. Obviously, this 50% cannot be permanent. This 25% additional will go away. We don't know when, though, right? Timelines are hazy. So your first thoughts?
Yeah. So actually, these are historical moments in this global relationships and geopolitics, economy, whatever. It will be remembered for a very long time. And since these are passing moments, deals will happen. I mean, there are two big countries that it is impossible that deals will not happen. Deal will happen. On what terms, when? There is some kind of a flux. There is an uncertainty. So, of course, markets don't like uncertainty, and hence, somewhat there is a kind of bit of uncertainty and sell-off in the marketplace. But my sense is, it has the only way to approach this subject is to figure out at our end what could be the impact on the earnings. Will there be a lasting impact? Will it be a deep impact? How big it will be? Then I spoke to my research head and all. They said, so that at this juncture, if the deals happen in next 10, 15 days, 1 month, 2 months, they don't see any impact in the acceleration in the earnings. See, right now what is happening is that we had a 4 or 5 quarters of slowdown in the earnings in India. And I think we are just about, this quarter itself was 2-3% better. And as the fiscal, monetary, and the arsenal of reforms which are going to be unleashed in next few quarters, my sense is we are going to see earnings acceleration. And also I'm presuming that some sort of deal will be in place in the weeks ahead. So I would not, in fact, I would use this opportunity wherever I was left with some kind of a cash or liquidity. I would definitely use this opportunity to buy some of the stocks which are corrected at this juncture.
Right. Ramdevji, 2 questions. One, you said if it happens on the outside, it's a 2-month kind of window?
I have no idea.
No. I'm not asking when it will happen. I'm saying that beyond, because if it stretches for too long, then obviously you'll have to reassess. But at this stage, if it... is that the feedback, or it was a general comment? I heard 2 months on the outside.
No. I have no timeline, but I think both sides are in a hurry, and it will happen in the sense that it might be a few weeks or maybe a month or 2. So in the overall scheme of investing, I would say this could be an opportunity, because if by chance market corrects by 4-5% more from here, because of what our headlines come, because the headlines are what drives, so there will be few days when headlines will be like this, and there will be, kind of talks from both sides. Headlines will be coming from both sides, and there will be reconciliatory, headlines. And it is happening in the backdrop of global bull market across in equities.
Yeah.
Ramdevji, I just want to and we'll talk about that as well. But is there your team has looked at direct impact, right? But is there an indirect impact as well? A lot of the impact lies outside the listed space, but then that feeds through in terms of income hit, job losses, income hit, consumption impact, and then loans going bad, etc. as well. Is that something which, because these are very labor-intensive sectors? Go on, sir.
Prashant, you just can't. You can't just believe that there won't be any deal. I mean, I'm not taking a situation that there won't be.
Okay, I think we are losing the line.
There will be
a little bit.
How good of that? Whether it remains at 25% or whether it somewhere kind of thing comes. So we have to assess only when the final
I think that's a bit of a scratchy line.
Let's do one thing.
We'll try and connect
yeah.
him. So if you can hear us, I'll try this one time, and then if not, we'll reconnect. So your point is well taken that you believe there will be a deal. Now it could be 1 to 2 months. If it is within 2 months, then maybe no real impact on the earnings acceleration and recovery that the market is currently penciling in. So my question to you is on the kind of money, because the only thing that's really helped the market in the last 8-9 months is domestic liquidity and firepower, right? It's been very steady with mutual funds. They still give us positive feedback when we ask them. But when you talk about HNIs and the non-retail, non-institutional money, what is that money thinking? Do you see a lot of money gushing in if there is another 2-3% correction?
Let's do one thing. Let's disconnect that line and connect it again. Maybe we get a better shot at hearing and seeing Ramdevji clearly. Let's do that.
We are in conversation with Ramdev Agarwal. We have him on a better line, hopefully now, from Kenya. Ramdevji, thank you so much once again. As Prashant was earlier asking, that there is the direct impact of these tariffs. And secondly, then there is a second-order impact. Now, on the second-order impact, you said that you refuse to believe that there won't be a trade deal. Even if there is a trade deal that happens, it is likely to be somewhere in the middle of the range, right? From 50 to, say, even if it settles, say, around 20, 25%, whatever it is, it'll still be higher than what we had earlier accounted for. What could the second-order impact of that be, according to you? Because, there is textiles, gems, jewelry, and shrimp feed, etc., fairly labor-intensive sectors. Do you think there could be job losses here? There could be impact on consumption because of something like this?
It is too early to guess on the second-order impact and things like that. Once the deal is in place, then we'll start assessing whether what will be the impact, because trade has its own way. I mean, I was talking to some gems jewelry guys. They're saying that, in fact, their claim is that they won't be impacted at all. So now you have to figure out how exactly they are going to do it. Mm-hmm. So I think the trade has its own way. The impact, I was talking to somebody yesterday, and he said, if it is 50%, then we'll lose 50% of the turnover. If it is 25%, we'll lose 25% of the turnover. So you can't figure out what will be the impact in particular company and the particular industry. And then it's not that only trade-related thing is happening in the entire economy. I mean, Indian economy is on the move. We have so-called, as PM said, arsenal of reforms coming in. This is a time when government is trying to unleash reforms. And so you have to also look at it, because this is all going to happen simultaneously. Then there is a massive flow of the domestic participation. So you have to see, when you look at market, you have to look at everything. And that's why I said, instead of looking at isolated things, let's look at it, what will be the impact on the earnings? Because the earnings are what is going to drive the markets, nothing else. So my sense is, if we have, say, 25% deal in next 10, 15 days or month or whatever, I think market has already calibrated that particular kind of thing. And the whole world is paying. It's not that we are only paying 25%, nobody else is paying. Even Pakistan, they have put 19, 20%. So I would think that it will be a new world. New world decided by the way America wants to treat the world, but world will find its own way.
Ramdev sir, your point on big measures from the government, right? And we've seen that. We've seen announcements, right, from income tax in the budget, and now GST cuts will be a reality, maybe around the Navratri season itself. But you see the market's reaction to these big changes as well. The GST cheer lasted for all of 1 week. And I mean, again, then the overall sentiment is so negative. Is there anything else that you would want from the government that can really spur the market sentiment back?
But there are so many things, so we can keep talking about it, in the sense that I am in Kenya here. I mean, when I see the possibility of tourism, I mean, we can do hundreds of billions of dollars of tourism out of India. But is there a focus on that? So we can go on sector by sector and see the possibility of non-financial, reforms, which are required to unleash this economy to its true potential. Education, I mean, Indians are going all over the world to get medical degree or MBA degree. So can we? I mean, that might become $50-100 billion kind of services exports or import opportunity. In fact, we should be the university of the world, which is very easily doable.
No, absolutely, sir. And the government absolutely take your point. And the government has been talking about some of these sectors. So non-financial changes that can be, brought in. Finally, just coming back to the earlier question that I had on flows, because still now in this slightly dark patch, domestic flows have held the market together. Mutual funds tell us that they're still very optimistic on steady flows, steady SIPs. What about the non-institutional local flows? What's your sense there?
See, the bigger the pile of money, more cautious they are. So the HNIs, they will all be sitting on the fence till the market goes in new high. And when it goes on new high, they are the guys who will take to absolutely new high. So this is the nature of the things. All the institutions, since they are managed by the, risk-averse people, they will take their own time. Instead of cashing on this kind of a soft patch, they will come when the sky is blue and everything is clean. And hence, once there is no uncertainty, they will come in and make new high. So there is enough money sitting. You must have seen DI buying, say 4-5 years back was about 1.5 lakh, 2 lakh crores. Last year was 5.5 lakh crores. And in this first half itself, in last 5 months, I think we have already done about 3 lakh, 3.5 lakh. So I think we are headed for 7 lakh crore kind of buying in the current year just by DI. On top of it, what HNIs do, you know that it could be a matching number. So we have plenty of buying this thing. The only thing is our earnings should held. And earnings are not dependent only on US trade deal. Of course, there'll be some at the margin, somewhere $5-10. But I think the much bigger gusher of earnings are going to come from reforms. I mean, even the GST reforms, if it is done in right spirit, you know, the way it is being done, say 28 to 18 and 12 to 5, or I mean, if it is done in a clean fashion, I think it is that itself is unleash a lot of earnings growth.
And in that program that we did, you made it clear, right? Time for tinkering is over. Has to be clear, directed, and make it, you know, low rate, simple, no real complications. And I think that will lead to many years of tax buoyancy, even if there is a one-time kind of a hit. In the immediate term, Ramdevji, is there a need to support some of these sectors through various measures?
Let the deal happen. I think we should wait for the deal to happen and then decide what we want to do, because the power of domestic consumption is very big. Now India is no more a $500 billion economy. It's a $4 trillion economy with 60-62% domestic consumption. I think we can unleash it. And that's what I think PM and the government is talking about. And this is a great time, the back on the wall, and we can definitely do it. So I hope this, whatever little bit setback is there in the tariff issue, I think we should use it to not only get a good deal on tariff side, but also unleash the domestic side.
Take that point, Mr. Agarwal. Thank you so much once again for joining us from the middle of your break. Hope you enjoy the rest of your holiday, and by the time you come back, the markets will be in a lot better shape. And hopefully, we have the trade deal that you believe is imminent as well. And thereafter, there could be everything else that we need to watch out for. If the trade deal does not happen up until the next 2 months, he believes that there could still not be any hit on the earnings. 7 lakh crore is the DII money that he believes will come in this year. And no worries as far as consumption is concerned, because if the trigger of reforms are unleashed on consumption, then perhaps that could keep the buoyancy intact for our markets. With that